I'd like to start this episode off today by taking a moment of silence for Stocktails. We had a good run, but it's time to move on. Henceforth, we will be called market mixers.
So why the name change? Well, we got a series of politely worded and courteous messages across X, LinkedIn, email, pretty much every platform under the sun. And we felt like we owed it to Ted Gilbert, who we learned owns the US trademark for Stocktails. We felt like we owed it to Ted and his 7 subscribers on YouTube to change the name. And I must admit, like Ted, you know, you look at that guy and you think that guy screams innovation in financial advice.
Yeah, 100%. Suck Ted. We like market mixers better anyway. Anyway, what are we drinking today, Arms? It's a bit of a fun cocktail, isn't it?
It is. It's what we like to call the Bloody Trump.
Oh.
A bit of a deviation on a Bloody Mary.
All right, heavy on the spice, light on the truth. It may just leave a lasting stain on democracy. I mean, my dress.
Cheers.
Cheers. Let's give it a go. Wow, there's a lot going on.
Yeah.
Slap me in the face. This week we're doing something a little bit different. We're going to be talking about your most recent trip to the US, where you had a research trip with a Timecodes growth conference.
Yep.
You obviously saw a lot of companies while you were there. What was the vibes like though? I feel like there's a lot of political shit happening in the US right now. It feels really, really scary. Did you feel that while you were there, or was it like business as usual?
Yeah, it was actually surprising. So yes, it was part of the Timecodes Boston Growth Conference, and shout out to Timecodes. I really love that conference because it's basically like 45-minute back-to-back meetings with like 1-on-1 or 2-on-1 or 3-on-1 with a company, which is pretty cool.
Sounds like a party.
It's pretty good actually. It's rare to get that sort of access, to be honest. And I think I saw like over 50 companies all together on that trip, not just at the conference, but in meetings that I organized myself. But I probably walked away with like 30 like sort of companies that I got good takeaways on. They were very different companies. So I saw everything from like a satellite company to a haircare products company to a nuclear reactor company to a medtech device company. And sometimes when you go that wide, it can be hard to see like any discernible thematics or the like. On the political front though, I think what struck me most is it didn't come through in the conversation. So when I was speaking to management and investor relations, there wasn't a lot of commentary on the administration or like even just political instability generally.
I feel like that's ignoring the elephant in the room then.
Yeah, I think what it meant is they were trying to focus on ignoring the noise, ignoring the macro, and focusing down on execution. It definitely did come through in, you know, the sectors where it was most pointed or most felt. So I spoke to a few health tech and healthcare companies, and you know they really feeling the impact of RFK Jr. and obviously that's just gotten worse with, you know, Trump saying one thing about Tylenol and sending poor Kenvue, which is the spin out of Johnson & Johnson of the Tylenol brand effectively, sending poor Kenvue down in share price. I think it was down like 7% in the last 5 days, but it was down a lot more. It was been a volatile ride in those last 5 days. So there was, health tech, healthcare, energy transition names also were pretty subdued. You know, obviously renewable energy policy isn't favored by the Trump administration, despite longer term tailwinds. So that was definitely commentary there. I think also on the flip side, like the crypto guys were just like cheering because regulatory stability for the first time there is definitely being felt, and they're, you know, really super enthused about the tailwinds to their businesses.
I think Trump has his own cryptocurrency, doesn't he?
Yeah, I think so.
Not sure who's buying that, but yes.
Yeah, he's definitely a crypto bull. And then on the tariff side of things, that did play out or come through, particularly in like consumer or import-export businesses. Just get your nose.
Yeah, it keeps slapping me in the face.
Much like Trump's policies.
Yes.
Yeah, so that came through in the likes of like Etsy, talking about, obviously Etsy sells kind of artist-made things online. So yeah, that's definitely having an impact on their business as well. So look, it came through. I think what was interesting is I didn't feel it like there. I mean, if you go city by city, I think Boston was pretty business-like, and maybe that's because I was concentrated on the conference. New York felt subdued, I would say. So like walking the streets, I actually bought this dress in New York, which is why I wore it today. But I felt like it was less vibey and more subdued than normal, and maybe that's a result of what you're seeing politically. And then San Francisco felt like it was probably the most optimistic city, but maybe that's because you're seeing some of those tech names with AI infrastructure being sort of, a super bullish thematic at the moment. I think that's where you saw that come through too.
Let's get into some of the companies that you saw. You obviously saw a lot. You said around like 50 over the week. You actually told me you were doing like 14 meetings a day, which is insane.
Yeah.
Were there any companies that like really stood out while you were there?
Yeah, I actually took, I think it was 138 pages of notes.
Oh my God.
Lots of notes. There were some companies that stood out, less for a sort of thematic sense and more for idiosyncratic reasons. But to run you through a few that I found interesting, there was one called Hannon Armstrong Sustainable Infrastructure, or HASI for short. HASI is interesting because they're basically a real estate investment trust that provides the financing for sustainable infrastructure. And, they finance things like renewable energy projects and the like. They're obviously on the nose, as I said before, like politically, but I think it's a really stable business. They're pursuing a capital-light partnership with KKR. So I think that one's definitely one that's interesting, an interesting way to play that more defensively. We saw Olaplex. I don't know if you've ever used Olaplex.
100%.
Yeah, my hairdresser was obsessed with Olaplex. I think I only took the meeting because of that. I actually didn't know that Olaplex was listed, but I hadn't heard about it for a while, and it was interesting. So there was a new CEO there who talked about how the brand has kind of come out of, I guess, the pro spheres and isn't being talked about as much, and that's having a detrimental impact on their business. But her aim is to turn it around. She's focusing back on that pro channel, coming up with sort of brand awareness metrics and the like. So I think she could have a really positive impact there, and it's trading below where it has historically, so some optionality in that one.
I feel like if anyone knows how to upsell, it's definitely hairdressers. I always walk away being like, oh my God, why did I buy that shampoo and conditioner? I didn't need it.
I know, yeah, same. I'm exactly the same. Some other ones, Hims also I thought was interesting. Hims is like a telehealth business. It sells like pills and things like Ozempic online.
Why is it called Hims, not hers?
I actually have both brands, so they do Hims and hers, but I think the stock ticker is Hims. Okay. Maybe it started out as Hims actually, I think. Mainly for like hair care and I was gonna say dick pills. Maybe you can bleep that one out, but pills that help get men excited.
Okay, cool.
But yeah, it's similar to the eucalyptus business here in Australia. But they've their share price did well, but they have come back recently because they've been under margin pressure. They're reinvesting a lot in their business, and I think people are underestimating where that return on investment will come through. They've also had an overhang from potentially being sued by the likes of Novo Nordisk because they're compounding GLP-1s. They actually used to have a partnership with Novo, which was rescinded, and so that was a bit of a talk of the conference too, but I thought it was interesting. I think that's pretty much. Oh no, Cisco. Cisco was another one that I thought was really interesting because
why? It feels like a little bit of an old dog.
Yeah, exactly. I think people still see it as the old phone or telephony business, but it's actually a play on this AI infrastructure and arguably the best position from a networking side of things on that. And I think you're seeing AI infrastructure broaden out from the likes of just NVIDIA to I guess more of the pipeline, and I think Cisco is potentially one of those plays.
When you got back, you told me about a meeting that you had with one of the big mega cap tech companies. I'm not going to name names. Maybe I should. It was Apple. But you said that you like walked away from that meeting being like, oh my God, was I just speaking to an AI bot? Can you tell me a little bit about that meeting?
Yeah, it was actually super bizarre. Like, number one, they wanted to meet virtually even though we were in the same city as them. Like, okay. I mean, it was better from a time zone point of view, so we agreed, but that was strange. And then, you know, when we spoke to the woman from investor relations, she refused to have her camera on. She kind of batted away every single question with very, you know, IR trained phrases. To be honest, like, it is a little pointless meeting with investor relations of the Mag 7 or like the top 20 companies in the US because they're so well trained. But regardless, like, it's good to kind of get an insight from them. And I do think it would be better if, like, instead of just being like, oh, we don't disclose that, like, they could say something interesting and draw your attention to something that's not known like widely, but is not necessarily material to the share price. It kind of speaks to the enthusiasm that someone has about the business when they're able to do that. When someone is just being very sort of, I guess, down the line and sounding like an AI bot, then that opacity kind of messes with how you think about the company. So, you know, I kind of walked away not very confident in Apple being able to address the whole AI thematic at all.
Well, we're shorting Apple, right?
Yeah, and that's part of it is, you know, we think that they're really behind in terms of AI product development and roadmap, which is not what you'd usually say of Apple in terms of innovation.
Was that the most disappointing meeting then that you had while you're in the US, or was there one that took the cake?
Definitely one that took the cake, and that was Stride. So Stride does like K-12 homeschooling, and that is a thematic or a trend that is growing, obviously, which is geopolitical concerns and cultural concerns and the rise of school shootings. People are worried about the safety of their children. And so, you know, I think it's an interesting thematic or trend to play. And so I was interested to meet the company, but the CEO was like really like combative and hostile and wouldn't answer simple questions about like capital allocation and buybacks, and weirdly wouldn't answer questions around when he's updating his long-term targets, even though the reason people were asking that is they'd had already far surpassed them. So they're doing well, right? So it was just a bit bizarre and almost made it, even though I was interested in the trend, it almost made it uninvestable.
Were there any common themes that emerged during the trip or anything that you heard management teams say like over and over again?
Yeah, as I said, I went pretty wide, cast the net pretty wide in terms of seeing very different companies. So I saw like, the haircare products companies, satellite companies, medtech companies. But when I kind of went deeper into my notes and put it all together, there were a few through lines that did emerge. The first is this AI infrastructure point.
Yeah, of course.
Yeah, AI was very much the topic du jour across the conference and in San Francisco, where most of the companies were benefiting from it. I think you're seeing a broadening of that thematic. So instead of just your usual sort of GPU players like NVIDIA, you are seeing some of the networking providers come to the fore, some of the like security and observability providers like Dynatrace come to the fore. So I think that was a really interesting thematic that you're seeing play out. And it's not just the hyperscalers anymore. So a lot of sovereigns, like sovereign wealth funds and countries are talking about investing in AI. So are banks, so are telcos. And then we saw Supermicro as well, which, you know, is a sort of a full rack provider to the sovereigns and neocloud. So they were talking that up too.
I feel like you walked away from that meeting not feeling great though. What happened there?
Yeah, so with Supermicro, I felt like it was actually a little bit Stride-like in that they got a bit defensive when I asked about their margins. And they were like, well, we're growing so much at the top line, so why does it matter a little bit? But what came through is that their margins are under some pressure from competitors. So that was an interesting, we've actually been really positive with the name, we've owned it, yeah. We ended up trimming it off the back of that meeting because we felt like they were underestimating some of the pressure from competition there. The second sort of thematic that came through was defense and intelligence, surveillance and reconnaissance. We think that they're in a secular upcycle. Again, a thematic that is being played out in our portfolio, as you know, but that came through in the companies that we saw. We saw Electro-Optic Systems, which is an Aussie microcap. It does like basically selling of remote weapon systems. Black Sky is a satellite company and is developing a Gen 3 satellite for wide area imaging that the US intelligence department can't wait for. And then even like something like MP Materials, which is a rare earths company, it's basically gotten like a floor underneath its pricing from the Department of Defense. So they've like guaranteed that they will pay a certain amount for rare earths, which is a really interesting thing. Again, we own Hyperion X in our portfolio, and it's benefiting from that thematic too. Another thematic was the energy transition. So we talked about how it's a bit unloved at the moment. The one part that was really loved is nuclear. Trump is obviously a nuclear bull, and I saw a company called Oklo, which is like doing, let me look it up what that's actually called. They're working on sodium fast 75 megawatt reactors. It's a very new type of small modular reactor.
What does that even mean?
I don't know, but basically it's like, it's a new technology module reactor. And because it's first of a kind, you would think that it would be priced for that risk, but it's just had this absolute blazing ramp in share price. I think partially because its chairman was Sam Altman. And
what?
He stepped down from the board for conflict reasons, which is even more of a bull signal because he wants to invest in the company. And thinks that they're really leveraged. They kind of are leveraged to AI from like the long-term energy thematic. But they've like signed a whole bunch of PPAs, which at the moment are like just paper. But people are just really capitalizing the sort of long-term opportunity there.
Have you invested in that company off the back of that meeting or no?
No, I find it really, really expensive. It's got no earnings at the moment. So that was just a wait and see. Exactly. And then the fourth thematic was like regulation and reimbursement having an impact on medtech. So there were quite a few companies that were like, we have to wait for the reimbursement codes to be right. And that shows you that it's not just about product. Like a product doesn't just have to be good to get adopted. You have to have people that can pay for it. And from that perspective, reimbursement really helps. So the last thematic that I'll kind of raise is SaaS and this whole sort of debate over, whether AI is going to eat SaaS. What
do you think?
I think the message that came through was customers want fewer vendors, but they will pay up for AI features. Atlassian is kind of the poster child of that. So their AI feature, which is called Rovo, now has 2.3 million monthly users. And they're migrating customers to cloud. There was a company called Freshworks, which is kind of a competitor to Atlassian, but more of a competitor to ServiceNow. And they're winning against ServiceNow because of the AI features that they have. And then Udemy, which is a education technology platform, they are kind of trying to move into an enterprise AI training platform. So yes, again, AI related, but SaaS and whether it's going to be eaten has come through. And I think it comes down to how much you're meeting your product roadmap and innovating that to account for AI.
You talked before about meeting Apple. Maybe it wasn't worth your time seeing the mega cap tech companies because there's so much information out there. In this world of AI, do you think you need to meet with management teams still? Is that really necessary?
You know what? 100%. I really think that you do need to meet with them. And actually, it took this trip for me to really figure that out. I hadn't done the Canaccord Boston Growth Conference for 6 years just because of a combination of COVID and having babies and starting up Minotaur. And it was just really, really good to get out there because of things like, with Stride, just seeing how openly hostile management is. I think it's kind of like seeing a picture in 3D versus 2D. You get a real feel for, you can read from a transcript the answers that management are giving you, but you can get a real feel for their enthusiasm for their strategy or their lack of enthusiasm for their strategy or what they're worried about based on some of the shakes in their voice.
Or even their body language.
Yeah, exactly. And Apple was an interesting case in point because I kind of got nothing from that meeting, and it was because it was kind of like AI. So no, I definitely think that it's worth doing. I think AI, as there's lots that you can leverage there, and particularly it's good to go and learn about these companies and meet management for the first time, then come back form more of a view, and then go and see them again. So it's probably less like of a need to see management regularly, but I do think it's an important part of what we do.
You obviously saw a lot of companies while you were there. How do you stop it from all being just like noise and actually distill those insights into something you can use for the portfolio?
Yeah, I actually have a pretty like rigorous process because I don't want to come back, if I see 30 companies, I don't want to come back with, I think like maybe 30 maybes. Like you want to come back with some actions and insights. So one of the things I do is I rate everything buy, hold, sell. And I came back with 12 buys, 5 sells, and 12 holds. And then even with the holds, I do this thing where you go, okay, if I was forced to make a decision.
Gun to your head.
Yeah. Is it a buy or a sell? Interestingly, I came back with 50-50 on those. So that's kind of the process for me. And then I kind of look at like where the thematics might be and whether I want to play that with a bunch of stocks or not.
So did you actually buy anything off the back of those meetings?
Yes, I did actually. So I thought one of the most interesting meetings was with Robinhood, the trading platform. Yeah. So I think Robinhood...
Their share price is up like ridiculous this year.
Yeah, it's done very well. Again, the importance of meetings, like the investor relations team really articulated their strategy really well. They're innovating in products. They're expanding into retirement accounts and debit and credit accounts and crypto through their acquisition of Bitstamp. And it felt like they were where Interactive Brokers was maybe like 10 years ago. So Interactive Brokers is known for being super innovative and having an innovative founder in Thomas Petterfy. I think that Vlad, who is the founder of Robinhood, is kind of the next Thomas, and as a result, Robinhood is the next Interactive Brokers. Another thing that we bought was Atlassian, funnily enough, and
the old stomping ground.
Yeah, so I want to be very clear that I know nothing about Atlassian from the inside anymore. It's been a really long time since I worked with Mike, and I don't have any insights other than what anyone else would from meeting with investor relations. That said, we met with investor relations, and again, I thought he articulated the strategy really well, talked about the AI features that they're rolling out, and made it very clear that the total addressable market for things like Jira are still very much at the beginning innings. So I think their total addressable market is like 15 billion. They're doing 1.5 billion of revenue.
So they don't feel like they're going to be killed by AI?
No, they did make the point of Atlassian software is for developers. And do you think there's going to be more or less developers in 5 or 10 years' time? I mean, the answer is more. And actually, more normal people are developers.
Yeah, so we're both learning how to
code, right? And I think Atlassian can help with that. That was also an interesting one that we picked up. We have little positions in both of those just because we're very early days in kind of exploring that. And as you know, we sort of size our positions with our knowledge and conviction. So we might build those positions up as we kind of firm up on the thesis there.
How about on the flip side of that? Was there anything that you sold off the back of those meetings?
Yeah.
Other than Apple, although we were already shorting that stock before you went.
Yeah, so as I kind of said before, but we can talk about it in more detail now. We trimmed SMCI, Supermicro. They've executed incredibly well riding the whole, NVIDIA GPU wave. But they are very dependent on NVIDIA's sort of cycles and, any sort of shakiness in that.
She's snoring.
Any sort of shakiness in that could interrupt that. I talked about the margin pressure that they're seeing before from competitors. And then this actually just comes down to portfolio discipline. It's had a really, really good run. From a risk management perspective, the risk return wasn't stacking up as much as it was when we first bought it. So we decided to trim around the edges there. So we still like it long term, but it was about timing, concentration, and discipline.
How about a company that you were super skeptical about that you came away feeling, I guess, more positive about?
Yeah, I think it goes back to that, the Olaplex company that I was talking about. I used to leave Olaplex in my hair overnight and wake up and it would be glamorous and amazing and smell great. So I actually really believe in the product, and that product is all about being science-backed. They do a lot of research into what works and what's healthy for your hair. I feel like that actually really came through a lot, just being a consumer of that product, then hearing that backed up by the CEO's rhetoric, was really powerful and going, okay, maybe there's something to think about here. I mean, we haven't bought it just because I'm like not sure about a consumer brand that's sort of upmarket prestige in the sort of macroeconomic environment you're seeing in the US at the moment. Consumer sentiment is obviously a little bit weaker. But it's one we might add to if we see it pull back or if we get convicted in the story.
Okay, after everything that you've like seen while you're in the US, after meeting all the companies, after walking through the cities, how do you feel about the US? Do you feel like it could be overcooked over there, or is there actually value?
I think if you look at, you know, S&P and NASDAQ on the headline, it looks expensive right now. But that's sort of the headline, I think, hides the dispersion. So what that essentially tells me is that stock picking matters, which is great for active fund managers like me. When you see the thematics that came through from the trip, like AI infrastructure or energy transition being done in pockets through nuclear and maybe not solar and wind, and even crypto coming through, you know, what that kind of essentially says is you've got to start kind of being really good at ascertaining what in those thematics matter. And I think that's where Minotaur's edge comes through, right? Like before I went on the trip, it was actually Torient who came up with my whole sort of information pack on all the companies. It told me what questions I should be asking management. And it was very clever in that I think Thomas engineered this prompt, which was like, don't just ask questions that we can answer from reading through transcripts or materials, ask them things that haven't come through. And that really came through in my questioning, I think. So I was able to ascertain these like weird little insights. And then as I've come back, you know, doing work on things like Olaplex, you know, AI has helped me put together a whole sort of history and dossier on the company very quickly and get up to speed. So I think, like, back to your question, yes, like, I think there are parts of the US that look expensive, but it's where stock picking matters because there's dispersion underneath.
Okay, well, I think that's a good place to end. Thanks so much for sharing all your insights from your US trip. I really appreciate it. And thank you for sharing a cocktail with me today, a bloody Trump.
A bloody Trump.
Cheers.
Cheers.